Welcome back. You're watching Big Deal, and we are here talking about the budget impact on the investments going forward. So, Anshu, we spoke about the equity markets and the theme that is brewing there. But fixed income in an interest rate hardening scenario is going to take much more prominence going forward. Now, REITs and InvITs have taken a huge beating when a tax has been introduced on the debt repayment as well, which I believe a few listed REITs and InvITs have a huge component of in terms of their cash distribution and also market-linked debenture changes. How do you read into these two?
Right, and thank you for asking me about fixed income, Nisha, because it's the largest asset class for our customers.
And it's going to grow in prominence
Absolutely.
in interest rate hardening scenario.
Yeah, so we'll take it in two parts. One is the specific tax clauses on REITs, InvITs, and maybe the MLDs. Well, as far as the REITs and InvITs are concerned, there is a level playing field now.
Yes.
So just by some degree of financial innovation or financial engineering or structuring your payments to the customer or investor in a certain way, you are not better off or worse off now anymore.
Yes.
So everyone is at a level playing field, which kind of harmonizes everything, and it's good for the customer in the long run and good for the sector.
Yes.
Now, just on the pure basis of performance and merit, the investor can choose.
Yes.
Again, that aberration has been taken away. So it actually should propel the asset class, and it's a great asset class. We are only about 1 trillion rupees in market cap for all the REITs and InvITs and so on.
Yes.
We believe this asset class will grow 10x in the next 5 to 10 years. So that's the potential of this asset class. Investors should look at this asset class now very aggressively in a fixed income scenario that we are in. So that is one. MLDs is a small market. It's about 25-30,000 crore issuance every year. But again, it was distorting from a high net worth investment perspective the demand and supply a little bit because of the tax aberration available, which has been taken off. So what it does is that it kind of frees up the customer or the investor to look at other avenues on the fixed income and the yield side. Opens up the arena for credit funds, residential real estate funds, commercial real estate funds, infrastructure funds, and so on. So a lot of real assets which have been financed by foreign capital, maybe now domestic capital will start looking at that more actively, beginning with the ultra high net worth, and then maybe trickling down to other categories of investors. So a new category of products and solutions should now start coming up and get acceptance from domestic capital.
Right.
So it's a great way forward for fixed income investors.
All right. Boost to fixed income investment, and very quickly, the themes that you like after the budget impact.
Yeah. So this budget is about the consumer. And this budget is about capex or investments. So as far as the consumer is concerned, obviously we talked about the all the push factors that will lead for higher consumption. Banking per se, we are very, very bullish on banking. Real estate, the cycle should continue. What we witnessed over the last 1.5 to 2 years, that cycle should continue. So bullish on real estate and auto. Auto sales are at all-time high, and a new category called EV and all of that is coming in. So that will continue.
And also changing the old vehicles.
The scrappage policy is there. So these are all propellers to the whole automobile sector. The cycle is very good. Exports may not do well, but companies that are led by domestic demand should do well.
All right.
So that is one consumption. The other is investments. So the good thing is that budget doesn't, pushes corporate capex out. Right. So corporate capex continues, grows from here. Infrastructure, partly cement, chemicals, wherever this capex cycle is taking off. Very positive on those aspects as well.
All right. So capex cycle very important for the country and infrastructure sector development as well. Now, Vineet, of course, for investment and impact investing and climate investing, how do you see the change of course with the budget impact?
Well, I think the push from the budget on multiple areas actually lay a fairly strong case for what the government thinks is the right way to look at sustainability, how to create the green infra. So I talked about the green hydrogen, which I think will see significant amount of investment in the coming times. We as investors, it's again an area which is new and emerging. So impact investors / mainstream investors, both would probably jointly play a role given the size, scale, and the impact of sustainability. But I think there are some finer points that the budget actually talks about. It talks about the mangrove and the Mishti, which is mangroves and others, which need to be, which are very sensitive from a biodiversity perspective, and they really want it to be taken care of, which I think is a very positive initiative from the government and a right incentive that goes out. Amit mentioned about biogas, and I think the mention about green credits and the intention to put together a framework which will actually create conscious around the society about the value of green and why sustainability matters for us is probably going to be far-changing and is going to be may not have got the kind of attention that it deserves, but probably will be will make a significant change to the society as well. Right. I personally feel from an investor's perspective, we'll have to come up with new thought process and new ideas to see that we can pull in very large amount of capital. And at Aavishkaar, we have been thinking about a carbon first fund, which probably will be the first of its kind fund. Yes. Where we use India as a base to attract very large amount of capital to go to the poorest of poor in the remotest part of India, grow trees, and then try to trade in carbon units or green units as
and carbon credit. Some of those policies, Vineet, has to be now articulated by the government and also subsidize and help the corporate world also embark on the transition into green energy space as well. But Amit, very quickly, your list of negatives and positives from the investment view post the budget.
Yeah, no, I wouldn't say negatives, but look, I think what we've learned over the years is that the government doesn't do everything in the budget. There are things that happen outside the budget as well. And this is something now which is well established. I must commend the fact that the government has set up the Damodaran expert committee to look at how private equity can get a big fillip in this country. I mean, and I think it's particularly important at this point of time, given the global volatility in capital flows, and given the fact that the private equity industry contributes over half of our FDI. And I think if we manage to keep growing private equity and venture capital in the country, it will massively aid the agenda that the government has set up, the Saptarishi agenda in the budget. Right. So one thing that I think the government could definitely do outside the budget is take into account whatever recommendations the Damodaran committee makes and follow that up very quickly with a set of further policy actions. And if we see those, I think that will be a further set of tailwinds to what I think has been a very encouraging budget.
All right. Thank you so much, Amit, Vineet, Anshu, for joining us on this riveting conversation. Of course, early days, budget still getting digested. We have to still see the impact. But these are the most important reactions coming in from the investors on the budget 2023. With that, it's a wrap. Thanks so much for tuning in.